Leading our panel, we'd like to welcome from Cointelegraph, the deputy editor, Jesse Coughlin. Jesse, come on up. We got a great panel coming up to join him today. We'd like to welcome, we've got Andrew Shearer. Andrew Shearer is joining us from Andrew Shearer from Z2K. We have Victor Yim, the head of FinTech from Cyberport, where I used to work, and of course, the legendary Dima Butsurin, who is the man from Hacken. So ladies and gentlemen, this is your panel. Dima, Victor, Alexander, take it away.
Thank you so much for that introduction. Wow. Hello, everybody. Very exciting to be in Hong Kong. An amazing city, an amazing venue WOW has set up for us. Thank you so much. My name's Jesse Coughlin. As you heard, I'm the Cointelegraph's deputy editor on the Asia Pacific news desk. And right now we're going to have a chat about solutions for AML, anti-money laundering, and KYC, know your customer, that are in DeFi, decentralized finance. So I imagine everyone in fintech and crypto knows very well that if you're in the money business, digital or not, you basically need to know where the money comes from, where it's going, and who's involved in the process. However, DeFi can be a little bit different, offers some similar financial products, but often with no AML or KYC checks. So with me today on stage, as I introduced, are three individuals very, very well versed in this area. Welcome. Could you please all introduce yourself, your name, where you work, and most of all, what you do? Dima, start with you.
Okay, I can start. Hi, hello everybody. So happy to be finally back in Hong Kong. My name is Dima. My role is CEO at Hacken. We are from 2017. We worked with more than 1,300 projects, and we have a booth here. Come to say hi. We work a lot in security and standards, and AML is a hot topic, and happy to share our thoughts and ideas how we can work together on this problem.
Victor?
Thank you, Jesse. Hi, everyone. I'm Victor Yim from Cyberport. I'm the head of FinTech. So Cyberport is the innovation and technology hub in Hong Kong. And recently, we also kind of get the support from the Hong Kong government to be the Web3 hub. So one of the major mission of my role is to support these guys, to recruit them into Cyberport, to attract them to land into Hong Kong and to grow their business. And I think today, apart from my capacity, I'm also like representing some of my background, which before joining Cyberport, I created the EKYC product for a credit bureau in Hong Kong, where it's still widely adopted by major banks and e-wallet. And prior to that, I have a long history in working with anti-money laundering, compliance, etc., business solution. Have been selling to banks across the region and working with regulators from across. Thank you.
Alex?
Thanks, Victor. So my name is Alex. I represent ZKMe. I'm the founder. We are a Web3 native CK KYC solution. So our promise is that we bring a Web3 native KYC solution to DApps. And really interested to be here. Thanks for having me.
All right, so I'll kick us off here. Victor, I wanted to ask you from the perspective of governments and regulators, when talking about KYC and AML and DeFi, how much of a priority is this at the moment?
So I'm in no capacity in speaking for the government or the regulators, but based on the observation and my experience both with the Hong Kong regulators as well as some others, especially for Hong Kong, ever since the policy statement about embracing virtual assets since last October, actually the regulators has been very busy in working with different applicants on the licensing, right? So, and at the same time, we are also going through a consultation of the new regulations, some of the details, the new regulation regime that is going to be effective on 1st of June. So I think that already overstretching their bandwidth. So I would say the current focus is still regulating the CFI rather than DeFi. But of course, I think AML, anti-terrorist financing has been a key mission of all the regulators in Hong Kong. The HKMA, the SFC, all of them are treating this very seriously. So even though it might not be on their prescripted agenda, I think this is still very important. And to add to that, apart from the more familiar licensing regime from the SFC, the Security and Futures Commission, there's also we also have the banking regulators, the Hong Kong Monetary Authority, who is also responsible for the stablecoin regulation settings. So they will also play an important role on the future DeFi regulations or DeFi compliance rules.
Okay, thank you. And I wanted to bring this up early, Alex. I know there is an argument for and against these solutions, and I wanted to know if we were to argue on the side that's for these solutions, why would DeFi protocols be interested in putting this in right now?
I mean, Victor already covered the most important aspect. So there is an aspect for a path towards compliance. Most of the regulators around the world, especially the most important markets, the US, the European Commission, Hong Kong, Singapore, all implementing FATF recommendations for same business, same rules for KYC and AML. So it's actually less of a argument of why to do it, but more of an argument when to do it. And I think right now is like the best time to capitalize on the trust deficit that exists with traditional finance to prove that actually DeFi can be decentralized and secure, can be private and compliant. KYC doesn't mean centralization, and centralization doesn't mean secure. And I think now is the right time for DeFi to proactively implement trust-building mechanisms, not only on a purely technical aspect, but maybe on a method aspect. So by implementing KYC and ML features into their front ends.
Okay, and Dima, regarding the anti-money laundering side, like tracing funds and all of that sort of thing, doesn't blockchain already solve for this sort of thing, or like what other AML tools are out there?
No, it didn't, and it's even much worse than in traditional financing system, where at least some of the databases are like centralized somewhere, and people like know what is happening. In crypto world, there is hundreds and maybe thousands of ways how to launder money, and you can launder money using bridges. RenBTC was the biggest laundering, is still the biggest laundering machine. According to Elliptic, it was 540 million laundered just through this bridge. Tornado Cash, the decentralized smart contract laundering machine, laundered more than $8 billion. And even if you are small, like a fraudster, scammer, you can easily launder money using some of the centralized exchanges. Like, I don't want to name, but you all know that some of the even medium-sized exchanges, they don't do any KYC when there is amount less than 2 Bitcoins. So, no, absolutely no. Crypto is still Wild West in terms of the tracing funds. The problem is not solved.
Very good, okay. And Alex, just wanted to ask you, you work mostly in this area and focus on KYC checks. Now, there are a few solutions out there in DeFi, enough that it could probably take up a panel of its own. but they are kind of similar in function, right? So can you give us a quick explainer just so we can understand how these generally work?
Sure. I think from a DeFi perspective, there's two different things that you need to differentiate. So from a functional perspective, KYC is the same whether it's like for a decentralized application or for a centralized application. The steps that you have to go through are the same. So some providers might focus more on regional markets or might go deeper into enhanced due diligence or might have special expertise in transaction monitoring or something like this. So on a functional perspective, what I'm trying to say is the differences might be minimal and might be more use case specific. I think if I'm a DeFi protocol, what I should be looking for is actually an architectural perspective. Am I going for a solution that is Web3 native, that is decentralized, or am I going for a fully centralized solution in KYC? The way I see it and the way my company has been approaching it is that there are three different ways on how I could do KYC from an architectural perspective. I could do a completely walled garden where the KYC procedure and the on-chain trading are completely separated. So there is a off-chain whitelisting process that uses traditional eKYC providers. Then there is the second case where I'm doing a traditional eKYC solution and then posting or tokenizing the results on chain, which I call like a bridge KYC. And then recently, through the application of modern technologies such as zero knowledge or soulbound tokens, actually we have the ability to build fully on-chain KYC solutions that are native to Web3 on a smart contract level. So I don't have the need for centralized KYC solutions anymore. I can do, just like I'm doing the trading on-chain, the whitelisting, the onboarding, and the ongoing monitoring all on-chain.
Okay, and I wanted to... Sorry, did you have something to say, Dima?
I just want to ask, and what about KYB, Know Your Business? Do you see trends that are more and more companies want to do it?
Yeah, I mean, in my perspective, there's a fundamental difference between KYB and KYC. In KYB, you rarely cover really private and sensitive data. Most of the KYB data is publicly available. So the goal of a KYB solution is slightly different. KYB solutions can be centralized and then put on chain as a result of that. But in a KYC procedure, you're handling completely personal private data that you cannot just post on chain. So you need some kind of mechanism that verifiably anonymizes the data before it is posted on chain. So that's where I see the difference between Web3 native KYB and Web3 native KYC.
Thanks for that, Alex. Thanks for that question, Dima. Very good. Now I wanted to open up this next question to all of you, so feel free to jump in. And looking at services like Tornado Cash, there's an ability to copy paste and potential ability to copy paste and deploy a protocol with these KYC AML checks removed. These are all alternatives and possibilities that could happen. So how realistic are these checks in DeFi, given the nature of crypto, given that the things that I described could happen?
So the Tornado Cash was, how did it work? You were able to, if you're a hacker and you stole like $100 million, you could use Tornado Cash without any limitation to basically launder this money into many different other wallets and then group together there at some other wallets at some other level and basically make a clean money again. And this is the biggest, I think, issue in our industry, that we have these tools that helping hackers to launder the money. And the problem multiplies. That a lot of exchanges, a lot of CDFI, a lot of CFI, they don't have proper blocks on funds that were going through such mixers. And I think it's a much more important problem to be solved rather than to chase like individuals and to like trace what is the source of funds, from your crypto investment. And I think us as a community, we need to put some additional pressure on platforms that use crypto, so to make not only on front end blocks to not allow this dirty money to interact, but also on the smart contract level. And us as a community, we need to help and educate people who are new into crypto, why it matters, why it's important, and why we need to focus there.
Thanks, Ivan.
So maybe I'll add a little bit from a traditional finance landscape. So I like at the very beginning, Jess, you were asking about whether like blockchain solved the problem, but I would like actually echoing or answering to that questions. Even for traditional finance, KYC and AML have not solved the problem. So even with all the checks, even with all the regulations, there are still loopholes and there are still money laundering happening every day, right? That's why there are penalties and all that is happening. So I think it's really a journey, just like in traditional finance. In order for us to solve for or improve the situation of any financial crimes, there has to be a collective effort between, like I think when we were talking, preparing for the panel, I think the community effort is very important. And then I guess it's also very important for different part of the industry, different stakeholders, the regulators, the policy bureau, other like players like the audit firm, academia, and I guess eventually we were saying like Web3 really bring the world together, right? We have this international panel. I think we could also leverage this to have more collaboration between different government, different regulators, because I don't think any single regulators can solve for the problems. So we need more collaboration, exchange of data or sharing of data so that we can make the whole thing in a better tomorrow.
Yeah, I absolutely want to second the sentiment that was just mentioned. It's up for the industry itself to implement trust-building mechanisms and to recognize that not every mechanism fits every solution. So mixers are to be handled completely different, in my opinion, than DeFi front ends, are to be handled completely different than on and off ramps. And each one of these different ways where money laundering could take place needs to have like a native Web3 technical solution be applied. So absolutely on, for example, on the mixer topic, that's the best place to implement solutions on a smart contract level. Maybe on a wallet, it's smarter to apply something on the on and off ramp. So I think this is an open call for the industry to step up and maybe front run regulations before regulations are imposed that don't fit the technical solution.
In general, regulations supposed to help industry to become mature and to protect users, but regulation has to be smart, and also industry players, they don't really like the word regulation, especially in our Web3 world, where we kind of permissionless economy which has a lot of freedom. I think the narrative when people are discussing regulation should be shifted into the, just using the different word, using the word rules. like like rules that are accepted by majority to protect industry from scam and fraud that helps and pushes the mass adoption. And yeah, those rules definitely need to be should be in the built in the sandbox. People from government, people from fintech should be part of it, and all should be done in cooperation.
Okay, thank you. And wanted to ask, KYC, it's kind of like the antithesis to DeFi, isn't it? It's meant to be this permissionless system, this new financial revolution which had none of the carryovers from TradFi. So how can DeFi users be convinced that these KYC checks are a good idea?
I will take on it. We are in open market, so there will be solutions for any groups. So if they want to be completely anonymized, it's their choice, but maybe the liquidity there will be harder. Maybe it's harder will be to make a fiat getaway or something like that. Maybe the yield will be less and risk are going to be more. So there should be solutions for everybody. And even, like the hot topic of account abstraction. Like a lot of crypto people, they don't like it because it basically, let me explain. Account abstraction is centralizing part of the key generation process and making it more user-friendly for those who doesn't trust themselves to take care of the private key, seed phrase. So some people will use it, some will not, but yeah, it's all about personal choice. And
in my opinion, it's a maturity process. So users already know that there are solutions at the moment that are fully centralized for KYC, that they can trust because they are established. And nowadays, technology exists that allows for truly anonymous but still compliant solutions. And these solutions will have to establish themselves in the market to offer like a second option for the true DeFi degen that is in DeFi because they want to stay anonymized. There will be solutions. The market will provide solutions for these kind of people.
Yeah, I think there is a concept called anonymous traceable. So to a certain extent, like kind of intersection with the zero knowledge. But I guess there has to be some mechanism that allows the identity to be reviewed when there is, for example, a court order, when there is a law enforcement activity going on. So that could protect the good people while still be able to get the bad people.
And if we're looking to where these potential KYC AML checks would apply, there are a few different DeFi applications out there. We have crypto casinos, NFT collections, trading applications, DAO governance apps and interfaces. So where do you think, or which of these DeFi applications would have a KYC AML check, or would it just apply to all of them?
In my opinion, KYC is not black and white. So it's actually a spectrum of different checks that you can make. I mean, arguably, doing IP blocking is already a form of knowing your customer. So there's already a lot of DeFi protocols that are doing IP blocking. There's already a lot of DeFi protocols that are doing blacklist scans through providers such as Hacken. So my response is there will be adoption both from the low end, protocols applying anti-Sybil protection, then going into demographic checks, checking is a user over 18, and then growing upwards. And then there will be, from the other end, solutions that want to be compliant from the very start, that will apply very strict KYC solutions and that's how the market will grow, from bottom up and top down.
In general, transparency and KYC is about transparency and accountability. It brings trust on the fundamental level. So, and I don't think it's issue for majority of the people. And I do KYC wherever like is requested, and I'm pretty sure like 99% of the people, they also don't have a lot of things to hide. So I'm happy to see that this is becoming part of our world.
So I think that can break down the questions into a little bit technicality about the KYC, right? So we could kind of divide that into the identity verification and the CDD. So I suppose for the CDD is more still related to AML, which is more like regulatory driven. So it could be any use case that could involve in any AML activity. But then for the IDV part, I think that could apply to most of the other use cases. Just like for example, for instance, telecommunication services. I think almost I think 90% of the countries nowadays required a verification of your identity before you can have a phone number. So that could relate it to some other national security reason or some other reason. And then you also mentioned, of course, a casino. You need age verification. So I think, and I guess with zero knowledge and the whole idea about Web3, it is actually very beneficial for IDV because now you own your data.
Yeah.
And I always tell people a very simple example. Like you guys now come to Hong Kong, something quite strange happening here is whenever you visit someone's office, actually the security guard will ask you to show your ID card or your passport, which is totally violating your privacy, right? Yeah. But then there's no solution. I mean, with CKP and this kind of solution, that solves the problem. But then just a simple example of how IDV is, or even KYC is important in everyday use cases.
I think Dima and Victor are hitting on the most important point. Actually, users don't really care about identifying themselves. What they care about is misuse of data. And that's why I think it's so important for us as an industry to implement solutions that on a verifiable, complete baseline level ensure that data is not misused. And that's the vision of the company that I founded, is to create a protocol that makes identity fully self-sovereign. Only the identity holder itself is in full control when and for what reason identification is used. And then I fully believe what Dima said. We will see a wide adoption of identification within Web3.
I think the last question here to wrap us up, I think, Alex, you said something about front-running regulations before. And so assuming that DeFi regulation is inevitable in this sort of realm, what we're talking about, I wanted to ask, thinking about the solutions out there now, what would be the best for DeFi if we were looking to balance user privacy while adhering to KYC, AML regulations? And if these solutions are in place in DeFi, could it help with more favorable regulation for the space?
I would say that there should be standards and DeFi protocols that want to prove that they're reliable, that they can be trusted. They need to pass certain audits and checks, compliance checks, that they are following the standards. And there are some initiatives that auditors and some centralized exchanges, they united their efforts to write the standards. I'm working on the standards under Ethereum Enterprise Alliance. There is already a standard for smart contract audit. There is soon going to be a standard for DeFi protocols, and there is also a standard called made by Crypto Consortium, C4, called Cryptocurrency Security Standard, that is very applicable to also like CEXes, DEXs, and every party who is working on like who is acting as a custodial. So that's my vision. That there is no unified solution that meets all the players in the industry, but there should be industry standards that companies can follow.
Yeah, I think standard is very important. Just now we also chat about it, and I think that the industry should also introduce some sort of a benchmark. So just like in the traditional AML sanction world, like banks has to go through some third-party tools that actually benchmark how good their matching engine is against the blacklist or sanction list. And I think the same has to be there for the DeFi, because otherwise, like how do people understand which one is already doing a good job, which one is not?
I mean, requirements are very clear. There is the same business, same rules kind of framework. So it's not like crypto has to define like completely new AML requirements or completely new KYC requirements. What crypto needs to do is to find a technical solution that fulfills existing KYC and AML requirements in such a way that it doesn't go against the ethos of DeFi. So that still allows for a decentralized application to run in the adequate level of privacy that is needed for an individual to interact with a completely decentralized and open network.
And I think with that, we'll end it there. We have covered a lot today, and I know that there's more to discuss on this topic, but we'll see what happens in the future, I guess. Everybody, could you please lend a hand to these amazing panelists? And guys, thank you so much for your time. Really appreciate it. Thanks.
Thank you, Jess.
Thank you.